Joining me now, David Costa, a professor from Robert Kennedy College in Zurich and the author of The Art of Banking. David, good morning. Thank you very much for joining us.
Good morning, Mark.
David, am I right in saying now that basically there's an open market for stolen bank account details?
Unfortunately, yes, there is a lot of pressure in Europe to recuperate some of the money outside in offshore accounts, and there is an open market. There are buyers, and that's why there are sellers. Without a buyer, there wouldn't be an incentive to provide with those bank data.
This sounds, I don't know whether it's morally wrong, but it certainly sounds wrong on some levels, David. What do you think?
Well, I think in one side, we have two sides of the problem. In one side, we can see that it's morally wrong to use stolen data for any purpose, especially by government, and paying for this stolen data to then recuperate tax money. On the other side, you have governments which are just simply saying we are tired of having jurisdiction like Switzerland, where effectively many of our citizens are hiding money and not paying taxes on, so we will recuperate the money in any possible way we have. So we have two sides of the deal. I think in one side is pretty much unethical, but governments seem to think that it is unethical in the first place to have bank accounts if you didn't declare the asset in your country. So it's a bit of a mixed view.
Post-UBS, Switzerland, of course, is trying to negotiate treaties, committing to cooperate with international tax probes. Is this going to damage that process? Is this going to damage the relationships between Switzerland and the likes of the UK, Germany, France and other countries?
Well, Switzerland, after the HSBC news, which initially originated in December, when they thought that the damage had been just limited to 10 accounts, suspended some of the negotiation with France. So, of course, this is a problem that Switzerland has to tackle at a global level with the governments, whether they can find a mutual solution to this. But I do see a lot of pressure in private banks for both North Americans and European clients. If we look at inflows and outflows in private banking, we have seen that the majority of inflows and now the big business is coming from Asia or Middle East and jurisdiction where the tax implication is not as important, while North American and European businesses slowly diminishing and probably will change radically. So Swiss banks have to be ready to change their model within the new environment.
So in this new environment, which banks, possibly the smaller ones, are going to benefit?
I think I was just reading a survey recently to see in terms of security, there are over 60% of private banks, not just in Switzerland but globally, which do provide unsecure forms to communicate with their clients through the website. So there are certain different level of security, and I think that the smaller bank, the typical Swiss bankers, where the staff is more controlled and there are more chances to implement a different level of security, they will probably win, and they will probably win more clients than, for instance, foreign banks with a branch in Switzerland. We have seen recently also French banks and some of the German banks pulling off totally from the private banking business just to maintain the consistency that if they are looking to prosecuting people with money abroad, they want themselves provide private banking services. And HSBC being a British bank, this might impact HSBC in the future as well.
David, very quickly, why aren't the thieves of the data being deterred? Because banking secrecy laws say that they'll be thrown in jail for 5 years. So why aren't they scared of these measures?
Because applicability is very complicated. In this case, particularly if there's a foreign offender and just leaves the country, there is no possible way to implement those laws.
David, thanks a lot. We'll speak to you soon. David Costa there from Robert Kennedy College.